Good morning, welcome to the Market View for Monday, the 4th of August 2014. As you can see from the 30-minute chart, on Friday we had a potential sell signal that came into the market at 8 a.m. and then at 9:30 we see the reaction there to the worse than expected manufacturing figures. I think we were forecast at 57, they came in at 55, and there we can see that prices thereafter moved sharply lower. Unfortunately, as the signal wasn't filled within the permitted 3 bars, unfortunately we missed out on the trade there. The market moved sideways, and then at 1:30 you see the market's reaction to the US non-farm payroll figures, which again, it looks dramatic, but I think just from the low to the high, you can see there is just at 57 pips, where normally you can get a far bigger range and reaction to the non-farm pay figure. So again, a bit of a damp reaction really there to the release of these figures, and then the market just resuming the sideways channel which it had already started in prior to the release of the non-farm payroll figures there. And this has been much the same really on the overnight market. Prices just stuck in a very small range there from the low to high. We're looking at 23 pips there, so again, fairly quiet market at the moment. In the daily chart you can see this Friday looks slightly better in the daily chart than the 30-minute chart, but of course there's the manufacturing figures there moving the market lower than the non-farm reaction too, but the range was sideways and choppy, and most of the move really was taken as the less than expected figures there for the manufacturing, which moved the market sharply low to begin with, and then the market trading sideways. So we're stuck in this sort of horrible slide to the downside really, this sort of slow grind, just the one day out of the last goodness knows how many days we're up to now. Let's just have a quick count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 12 down days out of 13 trading days there. So again, the market trying to move higher but failing to do so. If we go from this low, if we look across to the left, the next left to the downside is this one up to the high. Just remove this off the high there and do that again. We can see we're through this 76% retracement here, so let's just move down to the next low, which was probably going to be this one, and you see the market there finding support at 168.15. So that's a good area because it is more or less the major swing in the market where prices could actually find some sort of support. Volume there as well is fairly high for Friday as well, which we've not seen for some time. So good selling, market coming off the lows, so there is a bit of buying support there for the British pound at the moment. On the news front today, Spanish unemployment and construction PMI from the UK at 9:30. I'm not too concerned about this one, although because the markets haven't moved for a while, you never know how the market's going to react to it. So construction PMI out at 9:30. Meanwhile, in the Dow, prices finding support for Friday's trading session. Far less trading range. We've got confirmation of selling as well for the for the Dow on Friday as well. So we have seen some sort of offloading of stocks there, and no doubt some long stops being taken out by the pros there. So some professional selling around. This price bar, by the way, is consistent with what's known as buying pressure. We've got a shakeout, and the market should see some sort of support coming into the market during today. This is also confirmed in the implied volatility, where we see the implied going up to 13.7, historic at 8.89. And then in the price chart there, you can see just under 14%. 7.9 is the low, so we're looking around 15 or 16% before we have the pint glass effect, where the market would say that there's definitely a bottom in place. So at the moment we're sort of finding support, implied heading up to sort of a 90% increase. Definitely need at least 16% before we can say that there is a bottom in place following this correction that we're seeing at the moment. So hopefully things will start to improve, and we'll see a bit more volatility in the currency markets. They certainly need something to shake the markets up at the moment, and they're certainly ignoring all of the geopolitical events that are going on at the moment, in particular the one in Israel and Palestine. But that's the way the markets are at the moment, and there's not a lot we can actually do about it except wait for them to actually cheer up a bit and start to show some more volatility. And that's, of course, the pound that I'm talking about principally there. Right, all things being equal, see you in tomorrow's market view. Have a great day, and as ever, thank you for your support. Very much appreciated, particularly given the quiet conditions at the moment. And as ever, thanks for watching.